Hey YouTubers, Christopher Wanamaker here doing an updated financial literacy advice videos on the subject of credit scores. I am pretty much going to be going over and showing some video illustrations on my television on pretty much, what are the credit scores, what are the three different credit bureau scores, or FICO scores pretty much, how does credit affect you in a positive manner? How does it affect you in a negative manner, depending on whether you have a high credit score or low credit score? How can it, affect you financially? How can it affect your financial future? So these are the different things that we're going to be covering within this video, so you have a better understanding of your different credit bureaus and how do the low credit scores and high credit scores affect you in a positive and negative manner, and how can they benefit you as you're slowly increasing your credit score by becoming more financially responsible, mature, disciplined, motivated, and focused on your finances. How can it affect loans that you pull out? The size of the loans, the monthly payments on the loans, the APR interest, is it high or low? Is more of your monthly payments that you're making to pay back the loans? Is it more of each monthly payment going towards the interest, the principal, or how much? Is it like a quarter going to interest and three quarters going to principal? Is it one third going to interest and two thirds going to principal? Is it 50-50? And then, but also applying for credit cards, and what level of a credit card are you applying for and qualifying for? Level one, level two, level three, and some creditors and credit unions and banks even have a level four credit card. Or even a business credit card, different types of credit cards. What's the credit limit on those credit cards? Low, like $500, or really high in the $15,000 or more. What's the APR interest on those credit cards? Cashback rewards, are they low or high? Cash advance, or what you can pull out if you put a pin on the credit card and use it like a debit card. Can you pull out just a little bit, like $100, or can you pull out $5,000? Your credit score affects all of this. So, those people who are like, they're kind of, worried and nervous and scared because no one knocked on their door to come hold their hand to teach them the ins and outs of, credit cards and credit scores and credit, history and all that, financial literacy. No one came to teach them, and they didn't take the initiative to, call up bankers, financial advisors, tax auditors, credit card departments from banks, financial departments from banks, basic banking people, financial advisors from Northwest Mutual, whatever it is. They didn't call up, financial literacy subject matter experts within their field and write down and ask questions. This is why the whole concept of doing homework, especially in middle school, high school, and in college, of doing homework, getting it done on time, and doing homework research, especially for research projects and papers. This was the overall reasoning for it. So that way, when you get into adulthood, you can know how to, I have problems, I have financial problems, I have credit problems and credit score problems, and I have a basic idea of how to be a multitask problem solver. I know who to contact, I know who to research, I know who to call, I know the types of questions to come up with and ask the subject matter experts from these different topic area fields, and to get answers and then fine tune things and to get everything on track. So the whole concept of doing homework and doing research, especially for research papers and projects in high school and college, was for this reason, to know how to do this kind of adulting responsibility, to have the discipline, to have the knowledge. Knowledge is power. And to be able to do it yourself and become very independent and very self-sufficient, no matter your age or gender. So So this is all really important information on to better understand, credit scores and how they affect you in a positive and negative manner, whether you have low credit or high credit, or you're just beginning with credit. So we're going to first, I'm going to grab the phone and mount, and I'm going to show some videos on a couple CNBC little news clips on this first one is the big problem with credit scores, a little bit of why you should buy everything on credit cards. There's a specific section of the video, it's really important. And then I'm going to show some photo illustrations of the different credit scores and the different category topic factors, the ingredients that create a credit score, like credit history, for example, and a mixture of different credit and all that kind of stuff. And there's several categories. And then after that, I will also go into personal experience examples, both with credit cards and different loans, and how it affected me.
America runs on credit. The 3-digit score represents how likely a person is to pay his or her bills, and it impacts almost every aspect of an American's financial life.
It's like your passport into everything that you need to do as an adult.
And it affects so many things, not just access to credit. So your ability to get a credit card, a mortgage, a reasonable car loan. Landlords use credit reports and credit scores. So it'll affect your ability to get an apartment. Insurance companies use them.
Having a low or no credit score can have severe financial consequences. 42% of Americans said that their credit scores prevented them from accessing financial products, like credit cards or loans.
Life can become more expensive and more difficult as your credit score falls.
But some credit experts argue that the current credit reporting and scoring systems have major issues.
The current credit scoring system, as it stands, is flawed.
And this error of being fundamentally misaligned has huge ramifications across the system for millions of Americans.
Others say many of these criticisms are misguided.
The reality is that the credit reporting system that we have here in the United States is sort of like the crown jewel of the world.
A lot of the criticisms are based on some fundamental misunderstanding of how credit scores are calculated and how they're used.
If you take a moment to not be knee-jerk angry about financial service for a minute, then I think a reasonable person would have to conclude that these are actually good for consumers relative to a world without credit scores and what that would mean to our bottom lines.
So how do credit scores work in America? And do they help or hurt consumers? A credit score usually refers to a number between 300 and 850, which represents the holder's financial stability and credit worthiness. The higher the number, the better a consumer looks to potential lenders.
Credit scores in the 500s are considered to be very bad. Credit scores in the 600s, we're starting to use terms like subprime, near prime, getting close to average. But you really need to get yourself into the 700s before you actually hit the national average, which is between 710 and 720, and then start working your way into the elite level scores, which are well into the 700s and certainly into the 800s.
Credit scores and reports are two separate things. Reports refer to statements containing information about your credit situation, while scores are calculated based on that information from the report.
The credit report is like the test you took. The credit score is the grade you got on the test. One is influential over the other, but they're not the same thing.
Today, scores calculated by Fair Isaac Corporation, or FICO, have become the industry standard, used by 90% of top lenders. They're calculated using 5 main categories: 35% from payment history, 30% from the amount owed, 15% from the length of credit history, and 10% for new credit and the types of credit you have.
It's based on an analytic algorithm, so we look at actual data patterns to say what helps us predict whether you're going to pay credit in the future.
One of the main benefits of having a credit score is that it provides a quick and empirically sound method of measuring credit worthiness. Americans are borrowing today more than ever, with household debt topping $16 trillion during the second quarter of 2022. Making credit scores crucial to many businesses.
It allows lenders to make very, very precise decisions and have a very deep understanding of the likelihood of someone paying you back.
Experts say that such a streamlined process is also the reason why Americans have been able to enjoy low interest rates for so many years.
The credit scoring system allows industry to quickly and cheaply make decisions about whether or not you're going to have credit. The cheaper it is for the lender to decide whether or not they're going to give you credit, in the aggregate, the lower the cost is for the lender, and hopefully that gets passed along to the consumers in a more efficient system.
Without this system, lenders are going to do what lenders do, which is they're going to mitigate their risk. What that means in practical terms is higher interest rates, because that's how lenders mitigate risk. They charge everybody more to subsidize the risk that's posed by everyone, or more declinations. It's easier to say no to an applicant than to book an applicant who you know is going to default on a loan.
Representing a person's credit worthiness using numbers also allegedly help prevent lending discrimination. Lenders often relied on more subjective methods of evaluation prior to the invention of credit scores.
Credit scoring, when it was first developed, was an advancement. It is better than having some banker sit across from you and judge you and read the information in your credit score, because they bring a lot of their subjective analysis and their own life experience into the analysis. And if their life is different than your life, frankly, if it's some white guy sitting across from some woman of color, that analysis can be flawed.
If the information is not on a credit report, it is systemically impossible for your credit score to be influenced by it. What is not on your credit report? Things like your gender, your sexual orientation, your politics, your level of education, how much money you make, the socioeconomic makeup of your neighborhood, your level of education.
So we're able to assess credit risk looking only at the past behavior that is on the credit report, and only to the extent that it predicts future credit risk.
Yet despite its good intentions, experts say that the credit scoring system still suffers from discrimination. A survey of 5,000 US adults found that more than half of Black Americans reported having a low or no credit score, compared to 41% for Hispanics, 37% for whites, and 18% for Asian Americans.
Credit scores are based on past performance, so you're going backwards in history to make a judgment about the future. The further we go backwards in history, the deeper the structural racism in the United States was.
Intentional racism that happened decades ago gets baked into the cake, into the system, into the institutions and policies of our society. And that kind of structural racism requires no animus, no intent, but it still hurts Black and brown consumers.
If your parent put your name on a bill because they had bad credit and then they were delinquent, you can turn 18 and inherit derogatory information on your credit report through nothing that you did. If you're a new immigrant in this country, your prior credit history doesn't travel with you. These credit bureaus are mostly domestic, so you show up with nothing. And by the way, a blank slate is a bad place to be in credit scoring. It means that you're unscored and your information starts off low and poor.
19% of American adults have no credit history or are considered unscorable by existing systems.
Sadly, what the scores do is they sort of amplify those inequalities, because they go in and they say, okay, you're already disadvantaged. Now you can be doubly disadvantaged, because the score then sort of objectifies that you are somehow not worthy of being given a chance, that you are somehow deserving of much higher fines and fees than everyone else.
Errors in credit reports can also often lead to miscalculated scores. A survey in 2021 found that more than a third of those polled found errors in their credit reports. Of more than 700,000 credit or consumer reporting complaints received in 2021, more than half pertain to incorrect information on their report.
For me, it was a different person named Aaron Klein who didn't pay their cell phone bill in New Jersey. I also happened to live in New Jersey for graduate school, and this stuck with me for years.
1 in 20 have an error so serious it could cost them either the ability to get credit or a job or an apartment.
However, those within the industry argue otherwise.
When we look at our data, it is astronomically reliable. So we're constantly auditing and evaluating our data, our regulators are examining us on a regular, ongoing basis. So they're looking at all of our systems around data integrity, data reliability, how we engage with consumers, et cetera.
Under the Fair Credit Reporting Act, credit bureaus are responsible for correcting any inaccurate information on their reports. But research has suggested that many consumers find errors difficult to get fixed.
Credit bureaus are like a judge that always rules for the defendant. So if your mortgage servicer says you're late, even though you really were never late, and you have documentation that you were never late, it will still show up as late.
Fixing mistakes is expensive and time-consuming for the credit reporting and credit scoring industry. They are not incentivized to have accuracy, particularly if the mistakes are symmetric and even out.
Our entire role in the consumer credit ecosystem is to provide reliable, accurate information. If we were unable to do that, nobody would have any interest in engaging with us whatsoever. Our position is that the system only works and we can only succeed if our data is incredibly reliable and accurate, and that means engaging with consumers continually to try to make sure that they're able to effectively managing their credit and that they're able to effectively feel as though they can interface with us about any concerns that they have.
Another main concern is the lack of regulation and oversight that can ensure fairness and transparency within the industry.
I think the idea that the industry is unregulated is a fiction. And, we operate in one of the most highly regulated spaces possible.
You have a 50-year-old federal statute called the Fair Credit Reporting Act, which essentially mandates everything having to do with credit reports, from our rights to challenge information, our rights to freeze our credit reports, our rights to get copies of our credit reports. You have the Consumer Financial Protection Bureau, which regulates credit bureaus vis-a-vis credit report accuracy. You have the Federal Trade Commission that shares that regulatory responsibility.
I must say that the Consumer Financial Protection Bureau, which took over oversight of this industry about 10 years ago, they've done a really good job of trying to reform the credit bureaus. But I would go further than more regulation or even more laws.
Over the years, credit reporting and scoring agencies have made several changes in response to the criticisms against the industry. Perhaps the biggest change comes from the use of alternative data to improve accuracy and inclusion.
They've started trying to incorporate other quote-unquote non-traditional information. For example, if you pay your mortgage on time every month, your credit score is going to increase. But if you pay your rent on time every month, nothing happens because that information isn't reported.
We've innovated with scores like the FICO Score XD and the Ultra FICO Score. They augment traditional credit data with rich alternative data, such as how you pay your telco, utilities, as well as information that's in your checking and savings account. The point of these new scores is to allow consumers to find other ways beside the historical credit to demonstrate their ability to repay credit.
More regulatory changes could also be coming. Two bills, the Protecting Your Credit Score Act and the Comprehensive Credit Act, were both passed by the House in 2020, aimed at overhauling the credit scoring system with more oversight and provisions aimed at protecting consumer credit. They have yet to be put on a vote by the Senate.
One of the initiatives that we're championing, because we really think the solution to a lot of these concerns around how do you help consumers access financial products is an alternative data piece of legislation called the Credit Access and Inclusion Act, which would really encourage the reporting of rental data, utility data, bring new data into the system that would allow literally millions of Americans to access financial products and services.
But ultimately, credit in its current state is dependent on the consumer's financial decisions.
I'll tell you the two things that you need to do, and it will be impossible for you not to have a good score. Number one, never, ever miss a payment on anything, ever. That's easy. It's writing a check at the end of the month and paying your minimum payment, right? Number two, you got to stay out of credit card debt. And I'm not saying don't use credit cards. I'm saying don't max out your credit cards. Don't use them as a supplement to your income or to keep up with the Joneses or to impress somebody. Pay your bills on time, stay out of excessive credit card debt, lather, rinse, repeat, and you're going to have fantastic credit scores.
How you manage your credit is a sign of responsibility. It's not. A lot of people have negative items on their credit report because they were the victim of bad luck, not because they're bad people. So they got sick, they lost their job. And now they can't pay their bills, and their credit report's going to stop them from getting a new one? That's crazy.
So I will be showing something on Experian.com. They have made some of these changes with a thing called Credit Boost through the website, which I will show here in a little while, on how you can link up your bank accounts and any like utility bill, rent, and all that kind of stuff, auto loan, or even putting money away into a retirement account or something. If you link up your checking and savings to Experian.com in a section called Credit Boost, then once they verify all the accounts that are 90 days or older and you've made consistent payments on these things, they will track it and you will get a credit boost on your credit score specifically for Experian, and it will probably hit the other two credit bureaus, Equifax and TransUnion, several months to a year later. So one other video we're going to go into: why you should buy everything with credit cards for a specific section to get more information, how your credit score affects the credit cards, types of credit cards, credit limits, and APR interest rates on the cards as well. So here we go.
Love them or hate them, those plastic or metal cards that can instantly purchase anything from a coffee to a car are no stranger to consumers. More than 80% of Americans own at least one credit card. Every time you pay for something with a credit card, you're borrowing money from the card issuer to cover your purchase. While it might feel like it, it's certainly not free. You then have to pay that money back either in full at the end of the month or over time, with interest.
The average credit card charges about 20% interest these days, so it is a very profitable business.
So, first things first. If you're not in a place where you can pay that money back by the time it's due, experts don't recommend you have a credit card at all.
Paying 20% interest on a balance that you've accumulated, and then you pay interest on top of that. I mean, that's a really big hole that you're continuing to dig, and it's going to be really hard to get out of if you don't pay your credit card balance.
Credit cards require approval. Once you're approved, the bank authorizes a credit limit or the maximum amount of money you can borrow. That depends on factors such as your income, your other debts, and how much available credit you have on other cards. But here's the caveat. Whether or not you're approved depends on your credit score. Meanwhile, your credit score is determined by your credit report, the information related to your credit activity. Activity you might not have if you don't have a credit card. It's a catch-22.
How do you build your credit history? Well, the simplest thing is really to get a credit card, use your credit card, and pay it on time.
Credit scores generally range from 300 to 850. The higher the credit score, the more responsible you're deemed. Credit scores not only affect whether or not you get approved for credit cards, but also your credit limit and your interest rate on loans, mortgages, and the terms lenders may assign you. Insurance providers, landlords, and employers might also want to do a check to determine your trustworthiness.
If your goals are to buy a house, get a car, get a loan, the first thing that you need to do in order to build your credit history is to get that credit card going.
Those Jennifer Garner commercials are for Capital One, but there are numerous companies in the US that offer a wide range of credit cards. There's the issuers, American Express, Discover, Bank of America, Citi, Wells Fargo, and then there are the networks. They facilitate transactions between the merchants and the card issuers. The four major card networks are Visa, MasterCard, American Express, and Discover. Two of the world's largest card networks, American Express and Discover, are also card issuers. There are standard credit cards, rewards cards, balance transfer, charge, student, business, secured, limited purpose, prepaid cards, and the list goes on. Different options that may or may not be right for you depending on your personal circumstances.
All right, this is from Experian. This is very accurate for the changes they've made in the past couple of years. So one of the first things is 701 FICO score is the average score for Americans, and then from very poor is about 60% of Americans right now. Fair, also known as poor as well, is 18%. of Americans. Good is 21%, very good is 25%, and exceptional is about 20% of Americans. FICO score can also affect different categories from mortgages, applying for credit cards, auto loans, credit increases on your current credit cards, personal loans, all of that. So the scores are for very poor 300 to 579. Fair, also known as poor, is 580 to 669. 670 to 739 is good. Very good is 740 to 799, and exceptional is 800 to 850. 850 is perfect. And that is amongst all three credit bureaus of Experian, Equifax, and TransUnion. This gives you a basic generalization. This came from that website I was telling you about, the penny hoarder. They did an article one time. This is through Facebook, the penny hoarder. You can find them through Facebook. And they did an article one time on how a guy, went through his credit report, hadn't looked at it in a couple of years, found a couple of different discrepancy issues with his credit reports, which you should look into getting all three of your credit bureau credit reports, whether it be a digital PDF version or a paper version, mailed to you to review everything on your credit reports to find out if you need to dispute anything. And you should be doing that at least once a year, if not every other year. And so that way, if there are disputes, you dispute it. It could take some time. You might need some evidence, proof to show who you are, what your current address is, because this is the kind of stuff that's on your credit reports is all your different accounts, the history of the accounts each and every month for years. Did you, what was the total balance you charged on the account? What did you pay off? Did you pay it all off or a portion of it? All the history of all your different addresses that you lived at. Make sure that's all accurate and in order. Do you have any delinquencies or anything like that? And then they usually, even a paper letter version of your credit report will come with a dispute document. And then you also add any evidence proof you have to fight the dispute. You get it resolved, like this one guy did. He had a couple of different discrepancies. And 7 months later, after getting it fixed and straightened out, his credit score went up 234 points. So, and that's a huge jump, and that will affect his financial future in a more positive manner. So, the FICO credit score, pretty much, so your credit score range, the rating, and then the impact. So for 600 or below, bad, not eligible for a loan or credit card, high interest rates. 600 to 649, poor, unlikely to get loans with good terms or rates. 650 to 699, fair, could be offered average interest rates on loans. 700 to 749, good, could be offered better than average rates. 750 and above, excellent, take your pick of favorable loans and credit cards with good APR interest rates, and probably for both loans and credit cards, that will also mean higher credit limits as well. And then they said before the different factors determine credit score, which is types of credit used, 10%. Payment histories, 35%, that's the big one. Amounts owed, 30%. Length of credit history, 15%. New credit, 10%. So, and then we're going to go into, this is Experian.com. I got a credit report from Experian, Equifax, TransUnion in August of 2021. And then with the Experian one came with a letter. I didn't really deeply look into it, so I pulled it back out about a year later. And on the back of it, which I'll show when I grab the phone again, how it had information about Experian.com and Credit Boost and what it could do for me. So that's what this site is. All right, so here is the Experian.com website I've been using since July of 2022. I have been paying a $33 a month membership to be able to have access to all this. And so this is what the website can do for you. And it does a lot of great things if you really want to be more financially literate and you want to dig into your credit and lock your credit and dig into the details of your credit and monitor your credit. So as you can see, Experian.com, a lot of different labels of different tabs that do different things. We're going to go into this. First off, as of 6 January 2025, I got an updated report, which I get every 90 days for Experian. My credit score can change any day because it's, as you can see here, as a daily refresh because I pay for Experian.com. I recently found out that Equifax does the same thing, has probably an Equifax.com. I do not know about TransUnion. But so if I'm paying for Experian membership, then the Equifax and the TransUnion, every 90 days, you can get an updated report, push a button, get a refresh. And I did that as of 6 January. So as of 1st January 2025, this used to be 817. It's jumped up 4 points to 821 as of, of the 1st. But then on 6 January, so 2 days ago, Equifax got an updated report, and unfortunately, it's still stuck at 787 and has been for I think it's right around a year. And so the last the oldest update I can find in the system is 2nd March of last year, 2024. It was still at 787. I can't pull up anything further back than that, so I don't remember when it changed. It went up to and reached 787, but I'm hoping that here in 88 days, around this time in April, that I'll get another report and my Equifax will go up. But luckily, my TransUnion did recently go up. It went up 12 points. It was at 798 for a good long while, maybe a year or so, and then just recently got the updated report, and now I'm at 810. So for the second time in my life, as an adult, in my 30s, I have reached where 2 out of 3 of my credit scores are all in the 800s. I think the last time I did this was back around March of 2018 when I turned in my 2009 Hyundai Sonata and got my newer 2018 Hyundai Kona trade-in at a dealership in Colorado Springs. They pulled my credit and they were tracking Experian and Equifax at 803 each. And then I think my TransUnion was like in the 730s, 740s, something like that. So once again, I have reached 800, but it's really high 800s now because of the proper process I do with any kind of loans, with how using credit cards, the proper way to use them, which I have learned. When you're not in the 800s, the proper way to use credit cards is whatever your max credit limit is. How do most people use them? They either get close to maxing them out or they fully max them out. And then they only pay the minimum amount due because they're cheap. Well, that's not how you use credit cards appropriately. It's almost like, what's the proper etiquette to use a credit card? The proper etiquette, actually, but unfortunately most schools don't teach this. Some do, and I think more and more schools are getting into the whole financial literacy and requiring classes for people. I myself wouldn't mind teaching these kind of classes, both for financial literacy stuff, all the hints, tips, and tricks, fine-tuning, adulting 101 of finances, but also a little bit of emergency preparedness, because I'm big into emergency preparedness, but you can't really prepare if your finances are all screwed up, so they kind of go together. So anyway, how to use a credit card properly? Well, whatever the max credit limit is on each card, you should not be spending more than 30% of your max credit limit. And then You also need however much you put on and charged on the card, you need to pay the total freaking balance the very next time that the balance is due, not pay the minimum amount due. So you do that and you do it consistently month after month after month after month. Within a year, year and a half, your credit score will start to go through the roof. It'll start to increase 20 points, 30 points, 50 points, 100 points, who knows? So you're showing that you know and understand how to take accountability and be responsible with your credit. So then, but that's when you're doing that to build your credit, but none of your credit scores are in the 800. Well, once one of your credit scores reach at least 800, how do you keep increasing that 800 to 805, 810, 815, 820? And then how do you get the other ones that might be in the 600s or 700s? How do you get those eventually up into the 800s? You now, instead of using 30% of your max credit limit on your credit card and paying off the total balance every single month, you need to use no more than 10%. You've got to decrease your credit utilization on your credit cards. And then, so no more than 10% on each card of your max credit limit, pay off the total balance every single month. And the only way you should ever go, past 10% or 30%, like max it out, is if it's a emergency situation and you have no choice to pay for like hospital bills or a major repair on your vehicle or something. That is the proper way to be financially responsible with credit. If you have kids, they're teenagers, they're somehow bringing in their own money, the best thing is put the money in a bank account and then get a Fizz card, Fizz. It is pretty much a debit card. You do not get a line of credit. It's whatever money's in his or her checking account. And you have the Fizz card. It acts like a normal debit card, but yet they can't spend beyond what they have in their account. And then on top of, the Fizz card acts. It's more like a debit card, but it acts like a credit card in the form that it builds your credit. If you're using it to pay bills and stuff and all that, then it's helping you build your credit responsibly while you're young. So, or that you have no credit at all. So there's another. It's like a credit card, but it's more like a debit card, and it has limit stipulations to it of what can it do for you. So, but it helps to build credit and not spend beyond your means. It prevents that. So, look into something like that. So, as you can see, though, across the board for my different, currently as of the beginning of 2025, I do not make 6 or 7 figures. I make an average of about $50,000 net income. Have done that for the past couple of years. Over this next year, I'm making several financial moves, to hopefully change that and either increase it by 1.5 to 2 times by the end of the year. And so, but yet, even though I'm only making 50,000 net income, per year, I'm still reaching 800s. And if everything goes according to plan, then by the end of the first week of April 2025, I'll hopefully get another report here in 88 days from today. And then hopefully this will be either at exactly 800 or above that, so, and then all 3 of my credit reports, credit scores, will all be in the 800s. And that is, I'm 39 years old, will be 40 at the end of August of 2025, and I will have accomplished one of my goals of reaching all 3 credit scores, being so financially independent, responsible, and fine-tuning and paying attention to the details that I will, all 3 will be in the 800s. And I haven't even used my VA home loan yet because I served in the military for 13 years. So let's go down and see other areas. You can also lock, having this account allows me to lock my credit so no one can pull out like credit cards or loans or whatever. And then if I here soon, because I'm reaching these 800s, one thing I want to do is not only apply for a 3rd credit card through my bank, an American Express card, because I want to do future traveling. So the rewards points could benefit me for traveling. And then on top of that, I want to look at requesting a credit limit increase. Instead of it waiting for it to happen automatically, I want to, request that. They pull another form, another hard copy of a credit report. And so when they do that, I get approved and all that. So that helps me out. And that makes it where my current 10% credit limit that I use for each of my 2 cards, and we'll have 3 here soon. If my credit limit is increased, then I can, if I want to, spend more money, but I'm still staying within that 10% credit limit that I set for myself to, keep doing great with, them pulling my hard copy of my credit to get this credit limit increase and apply for a new credit card. It'll affect my 1 to maybe 2 to maybe all 3 of my credit scores by about 5 points for like 2 to 4 months, and then that hard inquiry will fall off in no more than 6 months, and then the credit scores of what they are right now will go right back up. So then there's boost your FICO scores, review your report, unlock Experian credit file. Stuff about applying for many different, what can I get at really awesome credit, cashback credit cards, what they offer. And then there's the score ingredients, which in one of the news videos talked about it. 35% is your payment history, and mine is exceptional. It shows here, how you've paid your bills in the past, whether you've paid on time or late or missed payments. It is a very important category of credit data for the FICO score. The most severe, recent, and frequent the late payment information, the greater the impact on a FICO score. Scroll down. Late payments of 30 plus days, 0. Collections, 0. Late payments 60 plus days, 0. Derogatory public records, 0. Account always paid as agreed, 100%. Time since most recent late payment, no delinquent accounts. If you forget to pay a bill, your FICO score could drop 100 points. So it gives me ideas, and I'll go more into that here in a minute. The one thing that it will affect, as you see right now, is my amount of debt is 30%, very good. Length of credit history, 15%, very good. Amount of new credit, 10% of score is exceptional. And then credit mix 10% of score, very good. But the amount of new credit, I would do the request for a new credit card. I apply and hopefully get approved for the American Express credit card here soon. This will drop. It will not be exceptional. It'll either be very good or just good. And then, because that card, when you get new credit cards, for it to be a part of amount of new credit to include credit, like payment history and stuff, length of credit history, some of these might get affected and drop a little bit. For how long? Probably a year. And then it'll start to go back up once your newer credit card is at least 12 or more months old. Once it's at least a year old, they all go up. So, and then there's all that. Score tracker. Going into this, so I applied, signed up for all this website in July of 2022 when a very interesting thing happened in my life. I got a little over a $25,000 VA back pay check in the mail that I was not expecting. I did not know that my 10% VA disability automatically was being increased to 40%. So I got a 6-year back pay. I owed the government a little money, so they took 2 years worth from a severance package I got from the military before I got out, and then I applied for VA disability, and they're like, "Oh no, we see that as double dipping. So when you were at 10%, we're going to garnish your wages for the next 9.5 years." But when it jumped from 10% to 40%. That's way more. In 6 years of back pay, they took 2 years for the 21 grand severance package to be paid back. So I got 4 years worth. So when I did this, when I signed up, then I was at so let's see, July 16, 2022, and I get that VA disability back pay check. I was at $794 for Experian. I go in here, I add accounts to Credit Boost, which I will show that here in a minute. And what happened was it jumped all the way up to 838 after a couple of days, about a week. And why is that? Because I did Credit Boost. And what Credit Boost is that it, I'll go into it. You go to here, Experian Boost, and then there's these added bills. When you add them, you're attaching your one bank account or multiple bank accounts to Experian.com. Sometimes they get disconnected when the internet issues, and you have to reconnect it. So they monitor extra things, like they said in that news thing, that they're trying to like figure out ways. Hey. We want to be able to see that you're paying your mortgage on time or your rent if you're a renter. We want to see that you're paying your car payments on time, that you're paying your utility bills. So once I added different bills, and this is an example, I was able to connect my bank accounts, and then for a week or two, they're verifying multiple different accounts. They're verifying that any account that is that I've been paying for 3 months or more, 90 days or more, and they're like, does he pay on time? Has he missed payments? All this other kind of stuff. And since I always pay my bills on time, I never miss a payment. A lot because I do mostly auto pay for nearly everything. So they verified that I have Comcast Xfinity, and I pay my monthly bill on time with auto pay. I pay my Verizon phone bill. I pay my public utilities, my gas bill. I pay my electric bill. I pay for my Peacock channels. I pay for a cell phone bill for my mom. I pay my apartment rent and water, sewer, garbage bill. I pay for a life insurance policy, even though that's, not exactly a bill, but, so all these things are consistent. Once they verify them, then your credit score increases. So that's what happened. It was at 794, and then it increased, I think it was 22 points for 1 week, and a couple more days later, it was another 22 points, 44-point increase, 838. And it stayed that way for a little while. And then I paid off, I used my new VA disability back paycheck that I wasn't expecting, and paid off my car loan 31 months ahead of time. And so I'm thinking that once I do that, that my 838 Experian credit score within a few months should go up to a perfect 850. But however, it did not. What it did is it dropped. 809, 838 to 809, and I'm like, what the hell? Why? I wanted to know why. So I called up Experian, and I talked to them, and I tried to get some information, like what did I do wrong, and all that. And so I come to find out a little financial literacy, credit, credit report, credit score thing, a hint, tip, and trick that no one taught me, that I had to learn myself. And that thing is, once you reach at some point in time in your throughout your adult journey, and you deal with credit cards or credit period, once you reach 2 forms of revolving credit, you always need to keep and have on hand at least 2 forms of revolving credit. Now, what do I mean? Like either 2 credit cards, or a credit card and say an auto loan. But if you go from 2 to 1 back down to 1 single form of revolving credit, then it won't help your credit score, it will hurt it. So if I had, at this point in time when I had 838, if I would have 3 forms of revolving credit at that time instead of just 2, and I would have gone from 3 to 2, then I still have at least 2, which means that this 838 would have gone up to a perfect 850 if I would have started out with 3 forms of revolving credit, no matter what forms those take. And so I learned that. So then, it drops down to 809 because I go from 2 to 1. And then, what I do is, once I do that, okay, so I need to, take on a new credit card because I need to get back to having 2 forms of revolving credit. They pull a hard copy, and so my credit score drops even more, 790. And then it goes a little bit back up after a little while, close to 799. But then I'm also, if something happens with my car, I got to make like a several $1,000 maintenance payment. I put it on the two different credit cards. One credit card is multiple years old. The other one is not even a year old. It's like a few months. And then so it drops even more down to 777. So I hurt myself, making some bad moves, but then I start building it back up, and then so in June of 2023, so nearly 11 months later, I'm, getting back up there, it dips a little bit, things happen, things occur, more maintenance services on the car. And then finally from mid-September 2023, 793. And then by September 23rd, 2023, I'm back at 801, and I have been 810, 817, going back a little bit here and there, but staying in the 800s. And as of recently, I went from the 817 to 818, and then now 821. So, important thing to know about credit and, or how many forms of revolving credit and how many you need to keep and all that. Additional FICO Score stuff. So this is FICO Score. This is what they look at through your banks if you're applying for new credit cards or credit limit increases and all that. Depending on the type of card and everything, they will look at these things. So, and I believe these numbers on like credit scores, the maximum credit score is 850. For FICO scores, it's 900 actually. So for credit cards, I have, for a score 2, bank card score 2, an 847, bank card score 8, which I think is the more important ones, 835, score 3 is a 811. If I'm going to look at getting an auto loan right now, auto score 8 is 824. Auto score 2 is 808, and then if I'm looking at pulling out a mortgage, 820 for mortgage score 2 number. So that's good to know. I'm all in the 800s when it comes to if they need to pull my credit, I could get approved for pretty much anything. Large lump sums of money with low APR interest rates. And then there is this as well. Credit score simulator. So what this is telling me, as of just recently, I got from 817 to an 818, and then at 821 for Experian. Well, then it says in the next 8 months that if I keep doing what I'm doing, it's an estimate. It's not exact. Before, when this was 817, it was telling me it could be 823. And by the beginning of the new year, by the first of this year, and then it didn't hit 823, it hit 821. So it did like a 3-point increase instead of a 5-point increase like this suggests. So it's an estimate. It's not saying it will be 826 in the next 8 months. It could be, not a guarantee. And then you could change things to show, if we waited 3 months instead, it would still be 821. If I wait 8 months, it could be 826 if I keep on track. But then it also does some other things. This is, if you continue to pay bills on time, this is what it could be. Forget to pay a bill. I'll go from 821 to 721. It'll drop by 100 points. Don't pay any of my bills. Drop 165 points, going from an 821 to 656. Declare bankruptcy, going from 821 to 295 point decrease to a 526, which is really poor and bad. Let's see, miss a payment by 90 days, lose 145 points. Have an account go to collection, lose 110 points. And you can even put in the amount. Probably the more the amount, the more it will drop. Let's test that theory. Let's make this 1,000. Okay, let's make it 10,000. 40,000. No. So I guess anywhere from $1,000 to $50,000. You get that goes to collections. It doesn't matter the amount. If it's below 50,000 or below, it will still only affect your credit by 110 points. And then apply for new credit. This is pretty much what I'm getting ready here to do. And so, apply for a new credit card and apply for a credit limit increase on one of my current cards. So it's pretty much saying, one inquiry is 5 points, 2 inquiries within a month is a 5-point decrease. But if I do 3, it drops by 15 points. So, which means that I can do 2 inquiries, a credit limit increase on one credit card, and then a request for a second credit card approval, and it should, whether it be one of my scores, 2 of my scores, or all 3 of my credit scores, will probably drop right around 5 points, and then within 2 to 6 months, the hard inquiry that they pulled of my report will drop off, and then it will go right back to all the scores that they currently are. So that's a great thing to know and to understand. And then let's see, another thing to show about this site is auto insurance. And so after putting in some information on so personal info, driving history, insurance info, vehicle info, edit my profile, add all that info, and then I have to figure out from my bank, input, what do I pay through my bank for full auto insurance coverage. And they're pretty much saying currently right now, and this fluctuates almost every day, I pay $104 a month currently for the 6-month insurance term. And compared to other parts of the country, other regions, other counties, for my region and county, I'm paying $32 below, so anywhere from $30 to $40. It fluctuates every day. Below what most people pay in my region. So for my region, the low is $91 a month, the average is $136, and the high is $202 for my region where I live in Washington State. So, but this will fluctuate and everything. And then it tells you, save on your auto insurance, average savings in your area of $483 if I wanted to get quotes from Geico or State Farm or something like that instead of going through just my bank. So, you could save $1,137 a year by switching multiple policies kind of thing. So if I was interested in that, I could look at what they offer. So it does that as well. So then, credit card information, at my credit scores, what can I apply for them? The Platinum card from American Express, a 99% match. I'm a 93% match for Delta Sky Miles Reserve American Express card. If I didn't want to go through my actual bank to get cards, I can go through this site. Same thing with loans, protection. What's protection? So protection plan for paying for my membership. Experian credit files locked, and it's telling me that, hey, my information is being found on the dark web. I'm getting a little reports. It's a low risk. This one's a medium risk. All that. And then I'm looking at maybe paying for delete me here soon, so they'll comb through find my data on tons of other businesses' websites and stuff, because they're acquiring my data, and then they delete me. People will go through and delete my information, and so this won't pop up as much as finding my information on the dark web or getting scam calls or telemarketers who get my phone number and all that. So paying attention to the details of your finances can definitely pay off in the long run and do you a lot of good, and preventing scams because you have your credit locked. Now, when I am getting ready to apply for the new credit card and the credit limit increase on one of my credit cards, I have to unlock my credit. Otherwise, my bank will not be able to pull a hard copy report, and they'll have to pull 2. So I'll be like, hey, let me know when you're ready. I have to unlock my credit, give it 1 minute, and then go ahead and pull, the hard inquiry. And then when they're like, I'm done, I got it, I'll lock it again. And then I'll unlock it again for when they pull it the second time, and then lock it again right afterwards. So there's only there'll be only a couple minute window for someone to possibly try to get into my account and use my credit to pull out loans and get credit cards in my name and try to steal my identity. The rest of the time it's locked. So that is pretty much all I have to show from this website and what it all entails, and how you can use it to it's a tool. It's a credit monitoring and control and fine-tuning and researching tool to learn more about your learn and control about your credit. So that's what like Experian.com, and now I guess Equifax recently have created their own Equifax.com, and if I paid a membership from them, they would have very similar to what Experian has, but then I would get more current updated reports on Equifax credit score as well. And then I don't know if TransUnion has their own site up, but if they don't, they probably will here soon. So that's all I have. I hope this information was very helpful and very useful to you, and it proves that I know what I'm talking about when it comes to dealing with credit, because 2 out of my 3 credit scores are all above 800, and my third one by spring of 2025 should be reaching 800 as well. So then I make $50,000 a year. I make, not 6 and 7 figures, and yet I'm still able to reach the 800 and above, credit scores amongst all 3 of my credit bureaus. But it takes time, energy, and effort too, and discipline and willpower to use credit appropriately. And then in the future, my next goal, after hitting all 3 credit reports in the 800s, will be at least 1 or more of my credit scores eventually reaching a perfect 850 credit score, and hopefully holding on to one of them being that, and holding on to it for at least a couple of months, like 90 to 100 days is one of my other goals, and I think I will accomplish it at some point. I might be mid 40s by then, but I'll make it happen. So, and what else does this do? Having higher credit limit, what does that really do for you? That makes it where I can request personal loans, auto loans, mortgages, higher dollar amounts, even if it's more money than I actually need from my bank. But I get to pay it back, whatever loans I pull out, pay it. Not only will I definitely get approved, because it's evidence proof that I'm very reliable and disciplined with credit. But then, so if I need 50,000, they might offer me freaking $500,000. It's like, I don't need that much. I was only looking for 50,000. Well, you definitely got the credit. You are approved. So we're not going to deny you what you need. But then, here's going to be the monthly payments. How many months do you want to do it? 12, 24, 36, 48, 60, 72, 84. How many year loan, what your monthly payments will be. And the biggest thing is not only the high credit score makes it where I get offered a ton of money, maybe more money than I need, but the payment plan is at lower monthly payments and with a very low APR interest. Like when I turned in my first car to a Hyundai dealership in Colorado Springs and got my second car for trade-in value, and they pulled my credit, and they Experian and Equifax were at 803 each, I was able to negotiate and got it went from I think it was about 6%, 5 or 6% APR interest on a 72-month auto loan, and with $411 a month payments, put $1,500 down on the car, and I was able to negotiate and talk them down because of my 803 credit scores for 2 of 3, and I got 2.99 APR interest. One of the salespeople is like, I've been doing this stuff for 45 years. You're the first customer I've ever seen negotiate that well, that skillfully, and in all my years of working for a car dealership. And you're the first person who's ever got whatever kind of auto loan agreement below 4%. He was blown away. Your crap. You should teach a class on this, to other people. And I've thought about it. I've had multiple people like, you are really knowledgeable in this stuff when it comes to the personalized finances, not like taxes and stock market stuff or crypto. Maybe you should like create PowerPoint slideshows in this stuff and go to high schools and teach juniors and seniors and maybe even colleges for other adults who just weren't taught this. So that's all I have. Hope this info is good, and I hope it helps you out. All right. All right. So now I'm pretty much going to go over, the ups and downs. Some of the information has already been given by those news report videos and everything on credit cards and credit scores, the positives, the negatives. It's like, what does a credit score really do? If you really, you jump into it, why is building your credit important? And, the biggest things are being applying for and qualifying for credit cards and different types and different levels with different credit limits, with different APR interest rates, and also loans of any type: personal loan, auto loans for getting a car, student loans, and mortgages. And so, like they said, if you have no credit history and everything, then you're either not going to get approved for a loan or a decent credit card at all, or you are going to get approved, but with like not as much. You're not going to be approved for very high loan. Whatever you do get approved for is going to be high monthly payments back, and with a very high interest rate. It's almost going to be so freaking high if your credit is really bad and poor and low or non-existent, starting from the bottom, then it's almost going to be like pulling out a payday loan. That's how bad it's going to be. But another thing you can do as well, especially when you're for your kids, teenagers and stuff, or young adults, if they're just not that financially responsible yet, then there is a newer type of cards, part of those changes that they've been making to help boost one's credit in different ways, shapes, and forms, is to use a Fizz card, Fizz. And what it pretty much is, it's like a debit card, but it acts like a credit card. And so Caleb Hammer, a YouTuber known as Caleb Hammer Does Financial Audit, tells people that after he's doing an audit on their personal finances over 6 months to a year of their bank statements, and he can figure out whether or not they're credit card people or not. Are they using them appropriately and properly, the proper way to use credit cards? And if they're not, they're like, you're not a credit card person. You could be one day, but you're not right now. So get something like the Fizz card. It's like a debit card that acts like a credit card. You can't spend more than what is in your bank account with the Fizz card because it's like a debit card. And once you spend all your money, then all your money's gone. But you keep using it and you use it for, monthly fixed and variable expenses, your basic responsibility bills like paying off a car loan, or rent, mortgage, utilities, all that with the Fizz card. Slowly over time, it will benefit your credit. It will boost your credit score. So starting your children off, of your teenagers, or if they have their own side business or like a gig job, lawn mowing or whatever, they put money into a bank and they get a Fizz card that's connected to that bank, and then they can start building their credit even before they turn 18. And then I believe from what I've heard, most people, once they say they're 18 or 19 or 25 or whatever, where do they normally start at, for a beginner? Unless your parents opened up like a card in your name or a loan in your name and hopefully made the payments and everything, monthly and properly, then most people start in like the 550 to 580 range. I don't know how they calculate that. Experian.com is a great resource to really, lock your credit, and so identity theft doesn't happen. To monitor your credit, and the subscription of just under $33 a month is what I pay, and all that kind of stuff. And I can see strengths, weaknesses, increases, decreases. The credit boost thing is amazing. And all this other kind of stuff. And if everything goes well because of it, in the next 3 to 6 months. One of my life financial goals will probably be accomplished of where all three of my credit reports are in the 800 score range. I've had two before when I was trading in my first Hyundai vehicle for my current second vehicle. My Experian and Equifax credit scores, they were tracking at 803 each when they pulled a hard copy of my credit. So get your kids into like Fizz or anybody that's not very responsible with finances or budgeting and all that. Fizz card is the way to go to get them started. Okay, so then credit scores. Once again, having a higher credit score pretty much will dictate. You're requesting some kind of loan, or maybe even more than one loan, and what you qualify for. The higher the credit score, even if you are requesting 5,000, you have a really high credit score, the 750 or above or whatever, you might get offered 20,000, 30,000, 50,000, even though you only need 5,000, and they're like, you tell them I only need this amount, and then they'll give you the whole, you want to pay it back. 12-month loan, 24-month loan, 36-month loan, 48-month loan, 60-month loan, 72, and I've even heard that some people are even doing 84-month loans. So what are the APR interest rates? What are the monthly payments? And all this other kind of stuff. So the lower the score, either the less amount you qualify for with a higher interest rate with a higher monthly payment, or you may not get approved at all. A great thing to do when it comes to loans is something that I did, talk about some of my personal experiences. When I was at Fort Lewis, Washington as a Army veteran, a supply sergeant at Fort Lewis with a field artillery battery, just a few weeks before deploying to Baghdad, Iraq, from beginning of September of 2009 to the end of August of 2010. I was going to war, my first year-long deployment to a war zone. My birthday's at the end of August, so I pulled out an Omni military loan, and I don't even remember. I had like a 580, 620, somewhere in there credit score. I applied for as much as I could, and I was approved for a $3,200 personal loan. It's kind of like a payday loan. It's just a little different specifically for veterans. That was right outside of Fort Lewis, Omni military loan. So $3,200 I was pulling out, and interest rate was decent. I don't know, 5-6%, something like that. And if I was a 24-month loan, and if I stuck to the monthly payments, I would have ended up paying I think it was like $4,400, maybe $4,500 back. So, and this was so I can have it and go have some serious fun for my birthday blowout, because I have no idea. I'm going to a war zone, and am I going to come back at all, or injured, no limbs, mentally, emotionally damaged, all that, or not at all. So took a little risk, and then those kind of loans make it where if you die, then they just take the hit pretty much. The loan goes away. They don't go after my family and all that. So, pulled out $3,200, owed them $4,500. And so then I deploy, and I get combat pay, hazard pay, 2.5 times what I was making being at Fort Lewis. And so I paid back, larger monthly lump sums, and so I paid it back in about, I think it was 6 months. Instead of a 24-month contract, I did 6 months. Paid it all completely, and so instead of owing them $4,500, I paid out of $3,200. They got their principal, $3,200 back, and then I paid about maybe $3,700 total back, the $3,200 principal with the interest. But because I paid it off in 6 months, not 24 months. And then, of course, that affects my credit score, paying off any kind of personal loans or loans in general, early, as long as there's no stipulation within the contract that if you do that, there could be a penalty. Some loans do that, but this one did not. And then several months later, by paying off this good amount of a loan, $3,200 early, shows up really good and increases my credit score anywhere from 15 to like 40 points, several months down the line. Now, what that also did is, okay, several months to a year, it increases my credit score. Well, a couple of years later, then I, leave Fort Lewis after I come back from Iraq, a couple months after I came back, and then I go to Oahu, Hawaii, and there for, 2 years on the island and a year in eastern Afghanistan for a year-long deployment with an aviation maintenance unit that worked on Black Hawk helicopters. Well, I did something very similar once again. So now my credit score is a lot higher. I think it was close to like in the 700 range, low 700s. And so then I go to another like Omni military loan kind of a place outside of a base on Oahu, getting ready to deploy. And we're going to Eastern Afghanistan for a year from January 2012 to January 2013. So sort of an early birthday, just in case, going to a war zone, I might not come back at all or the same. So I want to do something fun and have a good block leave vacation before we deploy. So I pull out another loan. And this time, because I have a higher credit score and with good credit history and making my payments on time and all that, I qualified for even more. I believe I qualified for a $5,300 loan this time, when the first time was only $3,200. And but I didn't request that amount. I wanted to know what's the maximum amount I could request, and I pulled out, I think it was $4,500. And so did like a 2-year contract again. I would owe about a total of $6,000 back, and did the same thing within the next 4 to 6 months being deployed. I doubled to tripled what I owed them back and paid it off in 4 to 6 months. So then out of 4,500, I probably paid 48 to 4,900 back. So I saved myself interest money. And then, several months later, my credit score goes up and I'm now in like the 740, 750 range. So that's what it does for loans. Now, another thing that happened when I was at Fort Lewis is I signed up for a WorldMark by Wyndham timeshare contract. And at first, it a smaller contract, bronze membership, 12,000 credits a year, all that. That wasn't that bad. It was like a 5-year contract. Several years later, after Fort Lewis, after Hawaii, got to Fort Carson, Colorado. Went into the Rocky Mountains on Blockley one time to Steamboat Springs, a stayed at a timeshare resort. And I got convinced at one of their meetings, timeshare meetings, so to get one of the like $100 debit card, and they convinced me to increase my membership from the bronze membership of 12,000 credits per year to silver 20,000. And I was stupid. I shouldn't have done that. I made a major financial mistake. Signed a 10-year contract, very high interest of like 14-15%. 10-year contracts, like $40,000. It'd be like $55,000-$60,000 when I'm fully done paying it off, for the principal and the interest. And so I got creative because I had very high credit scores on all 3 credit reports. So I got very creative of how to pay off my major 10-year contract debt early. And so because I had great credit history, great credit scores, bank knows me, trusts me, believes in me, the creditors believe in me, they know I'm reliable, I've done very well, been very due diligent, paying all my bills on time and all that, and it massively benefited me. Because what had happened is to pay off this debt early, I kind of switched contracts. I pulled out, went through my bank, turned in the title to my car, and I got an auto loan, and then I got a personal loan combined together, paid off my 10-year timeshare contract completely. And these loans, it's like, why would you exchange one loan for the other? Well, instead of a 10-year contract with a timeshare membership at a very high interest rate of like, 14-15%, I got 2 different loans through my bank at 5-year contracts each at like I think it was like a 5-6% interest for each of the loans. And then, those 5-year loans, I paid off each in about, I think it was right about 4 years, by going and doing plasma donation in the Colorado Springs area making every 6 weeks an extra like little over $400, and then using that as principal payments to pay off these loans even faster. So, so that's the things that having building your credit it can do. It's the same thing like when the pandemic happened. If money was starting to get really tight when I couldn't rideshare drive anymore because I needed updated driver's license and vehicle registration, my documents were expired, but yet all the DMVs in the area were closed down. So then if I didn't get Colorado unemployment approved 2 weeks later, I was going to be really hurting quickly within a month or two. I was going to be completely out of money. So then I qualified for Colorado employment, and that saved my bacon. But if that wasn't going to happen, then what I would have had to do is, using my credit and everything that I've built and done very well with, call up my bank and ask for a personal loan, and I'd qualify for a very high amount of a personal loan with a low interest, with a low monthly payment, because I've really built up my credit. So building up your credit can benefit you and even save your butt in a variety of ways during really hard times with natural disasters. You lost your home in an earthquake, a forest fire, a flood. You might have to pull out a personal loan. Hopefully, if you have a car title, your car's paid off, and then you turn that in and get more money, all that kind of stuff. When hard times come, knowing that you did really, really well with your finances can benefit you financially in the long run. So another thing it does, though, is not just for loans, but for credit cards. So this, higher credit limits will dictate how many credit cards you sign up for, what kinds of credit cards, what levels of credit cards, level 1, level 2, level 3. There's even a few credit bureaus that have level 4. What your credit limit on each card is. My older one is, $10,500. My newer one started out at $5,000. And then because I was being so due diligent with my paying off my total balance every single month and making my payments on time and all this other kind of stuff, staying within the 30% of whatever your max credit limit is, don't spend more than 30% or less. Your credit utilization is important. And so the credit history and paying everything on time and all that, within a year and a half, about 18 months after I got the new card at $5,000 credit limit, it jumped up to $6,500. About another 13 to 15 months after that, it went from $6,500 up to $7,800. So, now I could contact my bank and hit them up and ask them I want another increase on my newer card, and they could pull a hard inquiry as well, and then my credit score drops by about 5 points for 3 to 6 months, and then that hard inquiry will go away, and it'll increase again. My credit score will increase. So, having high credit allows me to do multiple things that benefit my financial future. It's applying for loans, how much of loans, what are the monthly interest rates to pay them back, what are the APR interest rates, what are the monthly payments, are they high because I have a low credit score, or are they both low because I have a high credit score? And then what kind of credit cards, what level 1, level 2, level 3. At the beginning of getting credit cards from my bank, it was a level 1 platinum credit card, $2,000 credit limit, $500 I could pull out cash back, 0.5% cash back rewards. But then I improved my credit score, increased my credit score more and more and more, and then I get rid of the level 1, and I get eventually a level 3 and then another level 3. Each of these have high credit limits, and which keep increasing slowly over time. They have a 1.5% cashback rewards instead of a 0.5, and I can pull out even more as a cash advance. I think it's about $1,500 to $2,000 on each card. Just have to put a pin on them, and where you use them kind of like a debit card. So, and then here very soon, I'm going to actually not only request, see if it happens automatically in the next 6 months, for the $7,800 to go up with a higher credit limit. Otherwise, I will contact the bank in order to request a hard inquiry be pulled, and it just affects my credit by 5 points for 3 to 6 months, and then we'll go right back. And then I'm going to apply for a third credit card, American Express, which has all the bonus reward point things for traveling, because the next year or two I want to do international travel. I'm about to get my passport booklet to be able to do that, to go visit some soldier buddies in some foreign countries. So that is pretty much, what credit does for you. How you need to dig into your credit reports and make sure all accounts that are open and closed and payments are accurate. Your different addresses you've lived at and moved to is all accurate. Your whole report is accurate. If there are disputes, dispute it, and your credit score can increase. On top of, look into Experian.com, go to Credit Boost to link up your accounts if you want to. They verify everything, get a credit boost. Don't be afraid to get into credit just because no one taught you how. Financial literacy is very important. It's becoming a hot topic amongst people online and YouTube videos and news reports and all that. I heard that for this, I think that the newest this year's school starting for Oregon, all schools will now have a required, I don't know if it's for all like freshmen through senior will do it, or at least junior and seniors will have to start doing a financial literacy type of class. So I know other school districts throughout the country, there are like about a dozen or so, taking financial literacy to be a little bit more important than learning like college algebra and calculus. That is only useful to students if they're going to work for NASA, anything to do with satellites, or possibly become a like engineer, building bridges and buildings and stuff. Otherwise, they're not going to use any of that stuff. So knowing how to do your own electrical or plumbing, or create a monthly budget using the information about credit scores and credit cards, financial literacy, paying your bills on time, living within your means, how to save money in different areas, how to do homework research to, every month, every couple of months, I'd say every quarter right about. So 3-4 times a year, dig into your monthly budgeting and contact your phone company, internet company, and look into new plans and how to fine tune your monthly budgeting. To save money, cut costs, and all of that. It's a part of your responsibility as an adult, and because no one's going to take care of you more than you. So you need to learn. Every man and woman getting into the adult world needs to learn financial literacy and budgeting and shopping more responsibly, living within your means, not beyond your means, being more independent and self-sufficient. So that way it's almost like, you believe in yourself 100%, your partner should believe in them 100%, you come together, you're 200%. If you break up and break apart, you're each still 100%. So and you should know how to do everything. You should know how to do all your own chores. You should know how to cook for yourself. You should know how to go grocery shopping. You should know how to, even if you're not a mechanics person like me, even though I know how to do some basic stuff, I have the money, I have emergency savings off to the side, and I have the money to take my car, and it makes any weird noise or anything, to like a Hyundai service center dealership, tell them what the noises are, what I want checked out, and then they look into it, and then whatever it costs, I can pay to replace it. And I can stay on top of all the basic maintenance services as well, of oil change, coolant, fluid exchange, transmission, brake fluid, changing out brake pads, new tires, windshield wipers, all that. You need to know this stuff. If you break down in the middle of nowhere. Emergency preparedness for natural disasters is becoming a really big thing. It's one of my passions. I have YouTube videos on my channel to check out how to building like 24 up to a 72-hour survival bug out bag, and then home preparedness, vehicle preparedness, pre-packing a vehicle when you're on like a standby, possible mandatory evacuation. I have a video on that. but it's like, financial literacy and emergency preparedness kind of intertwine, just like credit scores and credit card stuff does. The more financially literate and stable and on top of things you are, then a natural disaster happens. You can pull out personal loans, auto loan, mortgages. You can use credit cards. You have high credit limits with low APR interest. You have emergency savings off to the side. You can recover from these natural disasters faster than most people, than most Americans, because you're financially illiterate, financially responsible. You're on top of things. So you're a little stressed out, little depressed. The forest fire burnt down your home, or flood or earthquake destroyed your home, or mudslide or whatever it is, landslide, or a tornado, wiped out your vehicles and your home. But if you set yourself up well before the disaster happened, then you're not so stressed out. You have a game plan. You have resources, financial resources, to get ready to start over. So that's why it's really, really important to dig into credit, to start your credit, to use credit responsibly the way it's meant to properly be used, and to slowly over time be building your credit more and more as you get older. And then you will have a very amazing financial future if you're doing a little bit of all this. So, and you should not have, unless you're making 6 to 7 figures, you shouldn't, to be responsible with credit cards and stuff, you shouldn't have more than 3 personal and no more than 3 business, depending on how big your business is. Keep your business expenses separate from your personal as well. And there are people that have 7 to 15 different credit cards, but if you do that, then creditors see you as a high risk factor unless they know you make the money and you pay off the total balances every single month, no matter what. So otherwise, you're putting yourself at great risk. So that's all that I have for this video. I hope it was very informative. I hope it's very helpful to better understand credit scores and how credit cards affect it, how having a low or high credit score can affect your financial future, and for many different situational scenarios. So hope you enjoyed it. If you did, hit like, hit subscribe, stay safe out there, stay on top of your finances, keep researching, keep learning about finances, keep learning how to budget and fine-tune your personal finances, and just get better and better and better at your own personal finances, whether you're single, you have a partner, you're married, in a serious relationship or not, whether you have kids or not. Especially if you have kids, you need to learn to be more financially responsible and know your finances inside and out. And then when you do, share that information, pass it down to your children as well. That's very, very important. And then if you know better, you can help them start building their credit when they're really young, at teenager age, driver license age, or especially if they have a side gig job. So that is all I have. Hope you enjoyed this video, and stay safe. Happy holidays, and take care. And please hit like and subscribe and make any comments. All right, thanks. Have a good night. Bye.